I've never been as bullish as I am on a financial asset as this financial asset. The asymmetry is just crazy. I mean, wait till we take out 68 or 69. I mean, the FOMO is going to be silly. I was shocked by how quickly Silicon Valley Bank failed. I mean, they sold off some bonds very quickly. A few people realized, their balance sheet was a mess. They had negative equity. A couple of venture guys figured it out, called a few other venture guys. They spread the word, and suddenly, within 3 days, they were bankrupt. Can you imagine the same kind of thing going on when everyone comes to the same conclusion about the U.S. Treasury?
Lovers of cryptocurrency, the year 2024 has not spent any time in laying the groundwork for Bitcoin and the larger digital asset market as we set out on our trip. A massive change is taking place as the eagerly awaited Bitcoin halving event approaches. The U.S. Securities and Exchange Commission approved 11 spot Bitcoin exchange-traded funds, ETFs, a little more than a month ago, marking a significant milestone in the industry. With the approval of regulations, a large number of institutional investors can now participate, leading to an increase in demand that is changing the cryptocurrency market. Lawrence Lepard, a renowned investment manager and supporter of good money ideas, comes to light during this economic depression. With historically high inflows and a commanding lead in assets under management, the authorized Bitcoin ETFs have already demonstrated outstanding performance. Lawrence Lepard delves into the present crypto climate's madness in a recent interview with the Simply Bitcoin channel, predicting an even wilder journey to come. As Lawrence Lepard reveals his audacious forecast, which is that nothing is preventing Bitcoin from hitting new all-time highs and maybe rising to $200,000 or even $400,000 per coin during this cycle, Lawrence explores the U.S. economy beyond the hype surrounding cryptocurrencies, making a strong case for Bitcoin as a buffer against an approaching disaster that might destroy traditional assets. Come along for this fascinating journey as Lawrence Lepard helps you understand the complexities of the financial world and offers insights that may change the way you think about Bitcoins and the digital asset market's future. A thrilling journey into the center of the cryptocurrency revolution is ahead of you. Let's hear what he has to say.
And here's the other thing that's very interesting to me. I mean, I saw a great tweet the other day that said something along the lines of, the ETFs, the 9 ETFs now own 1% of, the total available Bitcoin outstanding, and it's 210,000, right? And, gosh, I mean, in that buying of 1%, what do we go, before the ETF was announced, where were we, 38, 40-ish? I mean, they bought 1% and they shoved it up, 10 grand. I mean, that's impressive, right? So what happens, and they're just going to keep coming. They're just going to keep coming. So, and I mean, the sovereign wealth guys are going to buy it. I went to Dubai about a week or two ago for this thing called Satoshi's Roundtable, which was interesting, although there were a lot of shitcoiners there. But there are also a lot of wealthy Arab, oil-related guys there. And, wait until these guys really figure out that this is better than gold. I mean, some of them have, but I mean, there's just so many big pools of money. And once they, there's just not enough of this stuff to go around. And so I'm beginning to think Samson's, maybe he's onto something here. I mean, maybe we do go to $1 million on this run. I certainly, 100,000 feels like a no-brainer, and I don't know. I mean, is it 2, 3, 4? I mean, who knows? But all I know is I'm really glad I got the coins I've got, and I'm not selling any of them, not right here, right now. And I'm not sure I'll ever sell any of them, but I need a significantly higher price. I mean, significantly higher to pry a few out of my hands. So it's pretty amazing to me what's going on. I mean, I'll give you my view on this whole, paper Bitcoin argument. Okay. I mean, and I see extremists on one side. I see people who say, look, we can see it all on chain and there's absolutely no way there can ever be paper Bitcoin. Those people are wrong. There are a lot of futures. There will be more futures and derivative contracts, et cetera, et cetera. And, any contract that impacts the market price, or that relates to buying and selling can impact the market price. So it's not as simple as there won't ever be paper manipulation. But having said that, it's a lot harder to manipulate this stuff than it is gold. And that's because, one, the paper markets and gold are a lot bigger and a lot deeper. Two, the GLD ETF, when it came out, they were allowed to do a lot of funny things like have counterparties and buy futures and sell futures. And, GLD, for all you know, has bought gold from the future Lehman Brothers that claims they have the gold, but they don't have it. So GLD became a mechanism for creating paper gold, in my opinion. If I read the prospectuses, a couple of them anyway, not all 9, on these particular ETFs. And what I think happened is they're much tighter, and so I think that Fidelity, particularly who I trust, they're going to be audited. And so they're going to have to show the coins they bought. They're going to have to show those addresses. And so it's going to be harder, for people to play games here. But to think that they're not going to play games, I think that's naive. I think that, you look at a group like BlackRock, you look at Wall Street and how they operate. There's always the potential, if there is a way to rehypothecate or to create paper claims, they will do it. And having said that, at the sovereign level, I think in the gold market, one of the things that happened is that there was a lot of paper being created through the Caymans. And I think it was the BIS and the central banks were actually doing it at critical points to try and hold the gold price down, because they knew that the gold price was the canary for monetary debasement. And so, but those sovereigns could take unlimited losses, right? So, those unlimited losses, it didn't matter. They could print the difference. But gold never went up 5x in 18 months the way Bitcoin has. And so this is going to be a much harder thing to mess with. But I think to assume that they cannot or will not try to mess with it is naive. I think that Wall Street operates, on a criminal basis, and so there's always the possibility that they will try to mess with it. And whether they'll be successful or not is unclear. But I think it's clearly an issue.
During the conversation, Lawrence Lepard went into great detail about self-custody and how important it is compared to exchange-traded funds. Lawrence noted that although self-custody is the best option for investors who are dedicated to protecting their coins from government inspection, Bitcoin ETFs have a distinct function. He clarified that ETFs provide a more approachable choice for people who don't care as much about censorship and don't have the technical know-how to safeguard their coins on their own. Lawrence emphasized the possibility that in the future, the government might order the seizure of assets that are not in their own possession. He highlighted a lack of trustworthiness in such a scenario, pointing out that investors depending on ETFs might quickly lose their assets, especially with significant Wall Street giants like BlackRock. But in spite of all of this, the powerful fund manager is sticking to his big bets on Bitcoin and Bitcoin ETFs until 2024 and beyond. Lawrence's perspective demonstrates a calculated strategy, taking into account the variety of investor requirements and tastes when negotiating the always-changing environment of digital assets. Let's hear what he has to say next.
As you and I both know, how many people have you orange pilled and they started off with one or two, and then the more they learned about it, they just kept adding? The demand here is just going to be insane. It's going to be absolutely insane. And so, I've never been as bullish as I am on a financial asset as this financial asset. The asymmetry is just crazy. Wait till we take out 68 or 69. The FOMO is going to be silly. And the thing I think people don't understand, you know it and I know it, is just how little of this stuff is for sale. Everyone says, it's $1 trillion market cap. Well, no, not all of it's for sale. 70, I saw a stat the other day, it was like 79% of it hadn't moved within 6 months. I think that's correct. Good Lord. So there's really a much smaller available supply. As more and more people come to it, and the other thing that you see in asset management is that people basically chase performance. And so this thing, it was up 150% last year. And once you see things, outperforming everything else, you increase your allocation. Sharp ratio is higher than nearly anything else. I think it depends on what time frame you use, but I think in general it has one of the highest Sharp ratios out there. And so, it's going to get to the point where it's going to be irresponsible not to have some. And I think that's the other thing that's going to happen. You're going to see people talking about it. People are going to tell their friends how well they did in it. And you're going to get guys calling their financial advisor, their RIA, and saying, hey, do we own any of this? No. Well, my friend owns it. It's doing really well. Why not? And then the RIA is going to say, oh shit, okay, well I don't want to say no anymore. All right, I'll put 2% in there, or I'll put 5% in there. And then when the the 2 or the 5% doubles, it becomes a bigger percentage. People are going to start saying, well, how come we were so light? How come we didn't have more? You know how this thing goes, right? And eventually it's Gresham's law, right? You and I, as we know, we've talked about it. We dream about the concept that eventually, it's going to be, this is the only thing to own. And at that point, you've got hyper Bitcoinization, and that is coming. But the issue is, just the time scale, and that's hard to figure out. But it's coming. I kind of tend to think it's coming before 2030, 2035. It could happen really quickly. One of the things I think is very interesting, Nico, that we haven't really talked about is how quickly things happen in this environment and how social media has changed the rules of the game. Let me just give you cite an example that I think is particularly relevant. Silicon Valley Bank was fine until it wasn't. We had a virtual internet-based bank run. They had $45 billion worth of deposits leave in one day, based on a panic started by some big Silicon Valley venture capitalists. And so, I'm not suggesting anything like that is coming to Bitcoin overnight. But what I am suggesting is that, in the world that we live in with social media and how news changes quickly, I mean, if Bitcoin went through 100,000 on its way to, to much higher numbers, I mean, it could happen faster than we think, is I guess the point I'm trying to make. I mean, I was shocked by how quickly Silicon Valley Bank failed. I mean, they sold off some bonds very quickly. A few people realized that, their balance sheet was a mess, that they had negative equity. A couple of venture guys figured it out, called a few other venture guys. They spread the word, and suddenly, within 3 days, they were bankrupt. All the deposits had fled. It's like, holy shit. So, my point is, can you imagine the same kind of thing going on when everyone comes to the same conclusion about the U.S. Treasury? Which ultimately, as Jerome Powell just told us, they will come to that conclusion unless we solve the problem at some point.
In conclusion, Lawrence Lepard presents a convincing vision for the future of Bitcoin. He highlights this financial asset's unparalleled asymmetry and is quite positive. Lawrence predicts that when Bitcoin reaches critical levels, FOMO will cause a spike in demand. The scarcity factor increases, with only around 79% of Bitcoin being available for purchase in the next 6 months. According to Lawrence, there will come a day when it will be financially imprudent for investors to not own Bitcoin. The momentum is anticipated to increase as it beats conventional assets with a high Sharpe ratio. Lawrence imagines a social domino effect, in which success stories encourage others to follow suit and put pressure on institutions and financial experts to change their minds. By drawing comparisons to the sudden collapse of Silicon Valley Bank, Lawrence highlights how quickly things may change in the digital age. He emphasizes the quickening speed of financial changes, even though he does not forecast that Bitcoin would suffer a similar fate. Lawrence ends by hinting at a change in thinking toward the U.S. Treasury, which is consistent with Jerome Powell's views. Lawrence seems to believe that hyper-Bitcoinization will occur before 2030-2035, even if the precise time frame is still unknown. Social media's transformational potential, combined with the cryptocurrency market's explosive growth, adds an element of unpredictability to Bitcoin's path to wider acceptance. So don't forget to like and subscribe for more videos like this. Until next time, happy investing.